Welcome to How Much Life Insurance Do I Need? My name's Glenn Cook and I'm the term guy. In the last video we saw that we're not actually insuring our life with life insurance. To protect our family, we're insuring our income because that's the financial loss upon our death, and that replacing that loss lets us maintain our family's lifestyle, which is our goal. Now we've got two distinct concepts here. One is we've got a stream of income, our paycheck, over a period of time, but life insurance pays out in a lump sum. It pays out all at once. So we need to connect these two using a calculator, and that's what we're going to do in this video. So if you want to head over to the term guy and scroll down to how much insurance do I need, we've got a calculator that does exactly that. Now the basic concept is this. The insurance is going to pay out a lump sum of money, let's say $1 million. Your family's going to pull out your replacement income every year for the time frame you've determined, and at the end of it, there's no money left. So let's go through the inputs. There's only 5 of them. They're very straightforward. The first question is your gross annual income. So if you make $50,000 a year or $100,000 a year, what have you. For this example, I'm going to use $75,000. The second question is the percent of income needed. Now, many people will assume that if we pass away, our family doesn't need all of our income to maintain their standard of living. They can maintain their current standard of living at less than our 100%, because at a minimum, we've got one less person eating groceries and driving a car. Commonly, people will use 60 to 80%, but you should use whatever you choose. In this example, I'm going to use 80%. The next two questions, interest and inflation, are exactly what you expect. Two things to keep in mind. Use a conservative interest rate, not an aggressive interest rate. And general rule of thumb in the financial sector is that interest is 2% higher than inflation. That tracks reasonably well over the long term. So for this example, I'm going to use 5% interest and 3% inflation. The last question is the number of years. Now, if you pass away tomorrow, how long do you want to maintain your family standard of income for? Now, there's a variety of different answers here. Let me suggest 2 of them to you. The first one is, for complete insurance protection, you're going to live from today and earn your income till retirement, at which point your income's gone, so we don't need to insure it anymore. Therefore, time frame number 1 is your current age to retirement. How many years is that? Let's use that. The second number people will use is the number of years to get the youngest child out of the house and financially independent. So if your youngest is 10 years old and you expect they'll be financially independent at 25, that would be 15 years. At that point, we're just going to assume the surviving spouse is on their own, they're earning an income and living under their own income. For this example, I'm going to use 20 years. And when we put in 20 years, we get our answer, $1.005 million. It takes $1 million to produce 80% of a $75,000 income over the next 20 years with no money left over. Now, the number looks very exact. In practice, it's really not. We've got such variability in the inputs, percent of income required, interest, inflation, and that kind of stuff, that the actual answer has a huge variability to it. What we're better off doing is playing around with the inputs to get a sense for what changes in the inputs do to our final number. That will let us make a better judgment call on the amount of insurance we need. So let's do that. Let's jump up to the amount of percentage of income needed, the second question, and change it from 80% down to 60%. When we do that, we get a number of about $750,000. And this is a better answer. What we're saying now is if you need 60 to 80% of your income, somewhere in that range, then you should have somewhere in the range of $750,000 to $1 million of life insurance. Now, let's change it back to 80% and come down the number of years to replace the income and change it from 20 down to 15. That gives us a number of $789,000, which curiously, and this is cool, is kind of in the middle of our range. It's certainly within the bounds of our current range of $750,000 to $1 million. So now we've broadened our inputs, but we still got the same range. We know if we need 60 to 80% of our income for about 15 to 20 years, we still need $750,000 to $1 million. So the more you play with this calculator, the more your ranges will kind of firm up. Now, what this tells us is, in this specific case, when you go to run quotes, you should be looking at quotes in the range of $750,000 to $1 million. If you get more than $1 million, that's fine. I just don't know why. And if you get much less than $750,000, that's also fine. But either you've got something else going on, or you now know there's not enough money to look after your family and their current lifestyle for the number of years that you'd projected, which means at some point their lifestyle is going to have to drop, which is counter kind of to what we're doing here. So build out your ranges, play with the calculator, And then we've got one last thing we want to do. Let's look at how these numbers are actually calculated. Let's change the number of years back to 20 so we get our nice round 1.005. At the bottom of the calculator, there's a link there that says View Full Results. Go ahead and click on it. That'll actually expand a table and show you how this number was calculated. It shows you if you put 1.005 million in a bank account today and withdraw $60,000 a year, which lets your family maintain their income without getting rich or lowering their lifestyle, at the end of 20 years, there's no money left. This isn't a jackpot. It's simply preserving your family's standard of income. In our next video, we're going to extend this and start looking at the different types of insurance. And once we know the different types of insurance and the amount, we can start running quotes.